Ryanair kicks off a week of reporting from some of Europe's biggest airlines, but profits slump as weak airfares take their toll. Welcome to Market Insight, I'm Ramzan Karamali. Well, Europe's largest airline by passenger number reported an 18% slump in half-yearly profits. The budget carrier has also been forced to cut forecasts for next year due to delivery delays from Boeing. However, sharp falls in ticket prices seen earlier this summer have eased significantly, according to its boss, Michael O'Leary. Also reporting this week are Air France-KLM and British Airways parent IAG. Well, to help us look at those Ryanair results in more detail and what to expect from the other airlines this week, I'm joined by Russ Mould, Investment Director at AJ Bell. Russ, thanks so much for joining us. Well, let's start with Ryanair. Shares fell around 5% at the open, but they're now trading close to unchanged on the day. Why? What have traders seen in these results to be so optimistic about the future?
I think they're very convinced by the company's long-term growth trajectory. It's adding bases, it's adding routes, and although it's having difficulty getting all of the aircraft it wants from Boeing, it's still confident in that long-term plan. And if you look, its record is looking pretty good. Its share price is still above where it was before the pandemic. That isn't the case for Jet2, EasyJet, Air France-KLM or IAG. So it's clearly in the right spot, right time and taking market share, and I think people are expecting that to continue.
Well, let's look at that Boeing impact. Boeing shares actually rose on Friday on bets that the workers would approve a new wage offer and end a 7-week strike. But just how damaging has this strike been to the overall industry?
I mean, it's an additional complication for Boeing particularly, and it's an unwelcome one for all of the company's customers. It's intriguing that, there are Pratt & Whitney engine problems at Airbus, and Airbus itself has got supply chain challenges managing its enormous backlog. So both major suppliers are trying to get these aircraft out the door on time, safely to the required standard. And that is a big challenge for them. And therefore, their customers are waiting for those vessels to be delivered so they can meet their capacity growth plans. It is a big challenge, and it's an unwelcome one at a time when airlines are dealing with increased staffing costs, oil price volatility, and in some cases, softer consumer confidence.
Air France-KLM have Q3 results out on Thursday and IAG on Friday. What do we need to look out for?
Similar themes to the ones we've just been discussing with Ryanair. It's very much passenger volumes versus ticket prices versus costs, and then versus long-term growth projections. I think long haul seems to be much tighter capacity than short haul right now. So much was taken out during the COVID and pandemic period, and that hasn't been able to come back on stream as quickly because of the big backlogs of the Airbus and Boeing. So those big birds aren't coming back on as quickly yet. So long haul may be a little bit healthier, but very similar challenges to Ryanair as we've seen earlier on this week.
Now, one massive company with results out tomorrow in Europe is Primark owner Associated British Foods. What are you looking for there, Russ?
Well, the shares hit a 6-month high in the middle of the year, and then have retreated from that really after a disappointing September update when the company flagged weakness in sugar and also a slowdown in the like-for-like growth at Primark. So they'll be two of the big features of this result. It might not be the results themselves, but more the outlook statement, where sugar is again expected to be weak, and then it'll really be down to like-for-like at Primark and also the margins there. They've done a good job rebuilding the margin at Primark, getting it back into the double digits. Can that be held? Still lots of competition, Boohoo, Shein, ASOS and other resurgent retailers, even like M&S, dare one say. And I think at the moment the consensus is for a slight drop in stated and adjusted earnings per share in the year ahead. So it'll really be guidance relative to that matters, I think.
Well, you mentioned ASOS. The online retailer's got results out tomorrow as well. What are you expecting there?
Yeah, I think a slight retreat from a 6-year high would be a problem that ASOS would love to have for its share price. Its shares are no higher than they were in 2009. And again, we've already had some good news, at least in terms of asset sales, debt refinancing. So it'll be focused on the balance sheet and inventory. And then it will be very much, again, how do the numbers stack up against prior guidance? Sales were seen down 15%, a small EBITDA profit, albeit a big wide range. Again, it'll be probably more the guidance for the coming year. Analysts are still expecting a net loss. But again, the more inventory they get down, the less discounting they have to do to sort that out, the better the future may be.
Russ Mould from AJ Bell, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.